Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news all bets are probably off now for 2025 on how it will turn out from the cascading impacts from the Trump tariff surge around the world. We were anticipating we'd be reporting some tariff retaliation news today, and there is some. But the most significant retaliation is from financial markets, and it is comprehensive. So far, there are no substantive retaliations announced, only threats to do so from China, Japan, South Korea, and the EU. But Canada has hit some US cars with a matching 25% tariff. Some countries, like New Zealand and Australia, have said they won't retaliate, but they tend to be the ones who only got slapped with a 10% rate on their exports. For them, it is wise to see how much will be effectively paid by US consumers, and in New Zealand's case, that'll likely be most of it. Most of the impact on us will come from second effect reactions in other trading partners. Perhaps most galling were the 32% tariffs Trump slapped on Taiwan. Back to the economic data releases, US jobless claims were unchanged last week from the week before and only marginally higher than year-ago levels. There are now 2.07 million people on these benefits, about 7% above year-ago levels. But that is their highest since November 2021. And there was a surge in job cuts reported in March, by far the highest since the early pandemic reaction. Although most are public service cuts, it seems unlikely they'll be the only ones in the months ahead. And the employment component of today's ISM Services PMI was unusually weak, and the overall index tumbled to its weakest since July 2024. It was barely expanding in March. The internationally benchmarked S&P Global Market version had its big drop in February, and the latest March version records a small bump up from then. But it reported cost inflation up to an 18-month high. Attention now turns to tomorrow's non-farm payrolls report, where a modest rise of 135,000 is anticipated. US exports rose in March as part of a repositioning in anticipation of tariffs and retaliation, but an interesting detail is that of the $8.3 billion rise in the month, $3.2 billion of that was for the export of gold. US imports held very high for a second month at record levels, but imports of gold decreased by $1.3 billion. The market chatter was that gold was flowing into the US, especially from London. Apparently that was just a rumour. Across the Pacific in China, the Caixin Services PMI rose in March to its best level of the year. This was notably stronger than the official services PMI. New orders rose the most in 3 months, driven by increases in domestic demand. We see that improved Chinese buying in the dairy auction. Australia is reporting sharp drops in job vacancies. The latest data is for February, and the levels reported are almost 10% lower than year-ago levels, down more than 5% in the prior 90 days alone. Almost all the decreases are in the private sector there. Container freight rates slipped another 2% last week from the week before to be 26% lower than year-ago levels. However, they're still 55% higher than pre-pandemic levels. Bulk freight rates fell 2.5% from last week to be 8% below year-ago levels. Basically, these are back to pre-pandemic levels. The US Treasury 10-year yield is now at 4.04% and down 17 basis points from yesterday at this time. And the VIX Volatility Index has jumped suddenly, although not yet to an extreme level. Wall Street is in its Thursday session and down 4.3% on the S&P 500 after the tariff announcements and showing no signs of improving. The price of gold will start today at just on $3,108 an ounce and down a net $24 from yesterday. And oil prices have dropped $5 from yesterday to just on $66.50 a barrel in the US, while the international Brent price is now just under $69 a barrel. Not only is demand expected to soften as tariffs take their toll, OPEC countries unexpectedly announced a 411,000 barrel per day production increase for May, far exceeding the planned 135,000 barrels a day increase. It seems an incredibly naive announcement from their self-interest point of view. And the Kiwi dollar is now at 58.1 US cents and up 80 basis points from this time yesterday. That is a 1.8% appreciation since the start of the week and a 3.8% appreciation since the start of March. Against the Aussie, we're up 40 basis points at 91.5 Australian cents. Against the euro, we're down 20 basis points at just over 52.6 euro cents. That all means our trade-weighted index starts today at just on 67 and up 20 basis points. And the Bitcoin price starts today at $82,172 and down a sharpish 5.8% from yesterday. Volatility over the past 24 hours has been very high at plus or minus 4.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.